Hi everyone and welcome back to Stephan Livera podcast. This show is brought to you by Bold, where American listeners can buy Bitcoin for the industry's lowest fees and earn the highest Bitcoin-backed rewards with the Bold debit card. Now, there's been a lot of talk about Bitcoin Treasury Companies and, some people wanted to hear some skepticism of Bitcoin Treasury Companies. Now, Jad Mubaslat is joining me today to explain his view on this. So, as I understand, Jad, you are an engineer at Sonoda, but you are obviously in a personal capacity and more as a Bitcoiner joining me to discuss your skepticism of Bitcoin Treasury Companies. So, first off, welcome to the show.
Awesome. Thank you so much, Stephan. Appreciate you having me on today. And yeah, exactly like you said, the reason I wanted to be on here is, as a kind of passionate Bitcoiner, seeing some potential red flags for, what's been going on recently. And also to give a little bit more background as well, I've been in the Bitcoin space since around 2013, started initially with bitquick.co, basically a platform for people to trade Bitcoin, and also then worked as an engineer at rain.com. Now is actually, I think, the largest cryptocurrency exchange in the Middle East. And interestingly, while I was over at rain.com, we had even written about the Terra Luna collapse before it even, went down. And I'll even say too, when I first saw that, MicroStrategy was implementing their Bitcoin strategy, if you will. I mean, it wasn't even necessarily a formal strategy way back in the day. Initially I was extremely excited about that. And we saw some companies like Tesla, also following on, but, fast forward till today, it feels like, things are getting a little bit out of hand, if you will. And so, yeah, I wanted to come on and just kind of give an opposing potential perspective and just kind of talk about some of the risks that are really out here, and also some of the similarities to, things that have happened nearly 100 years ago. It looks like we're, in some ways, we're doing the exact same things that had happened 100 years ago.
Interesting. Yeah. So look, let's get into this. Of course, I think we're probably not going to agree on everything, but I am, and I guess I'll just say up front, I am bullish on these, but I do acknowledge that obviously there are risks, and I see it like there's going to be this kind of initial sprint, and there will likely be a big winner in each jurisdiction. It might be like a winner take most kind of thing, and I acknowledge certainly that there will be people who get wrecked on as the equity holder on a particular treasury company, and of course it's not to say that every treasury company is gonna take over the world, but I think it's fair to say a bunch of them have been outperforming. And I guess I'll just quickly upfront say I am going to be involved with one, so I'll just say that up front. I can't say what it is yet. It's going to be going public probably in about a month or so, and I'm an advisor and an investor in that particular entity in a non-US country. So I'll just put that up there up front, and let's hear your kind of opening case. Now, I guess let's distinguish between merely hodling Bitcoin, right? Like just buying and holding on the balance sheet. I presume you have no issue with that. The issue I see you're taking is more about the quote unquote financial engineering, this kind of aggressive use of equity and debt to aggressively grow your balance sheet using Bitcoin. I guess that's where your main issue is. So can you give us your high level opening argument?
Absolutely. So, I'd say the argument boils down to, like, if you think about investing from a first principles perspective, the reason you would want to invest in any entity, whether it's public or private, is there are some kind of cash flows being generated. The business is able to take their assets and do something innovative with it to, almost like a 1 + 1 = 3. If I have sugar and water and lemons, well, I can put them together to create a cash flow positive business and ideally bring in, revenues from, doing some kind of business activity. But the problem that I seem to have with these Bitcoin treasury companies is that by and large, especially the new ones, there isn't necessarily any cash flow positive business that is underlying the security, the public traded stock. And so, and especially when we're talking about an asset like Bitcoin that doesn't have any type of endemic yield to it, it's hard to see how, if the company doesn't have any way to create cash flows, that they're going to be able to do anything particularly, let's say, innovative to be able to sustainably grow that balance sheet. I almost see that perhaps the only way that some of these entities end up surviving is, if the dollar absolutely completely collapses. But aside from that, it's kind of hard to envision how these things end up unwrapping ultimately. So it's almost like first principles perspective. If you don't have a cash flow positive business and the only thing you have on your balance sheet is an asset that doesn't create cash flow positive, any type of cash flow, then it kind of leads you to believe that, all right, there must be leverage or something unsustainable baked into the strategy. And so I think something else that would be interesting to go into as well is, not only is accretive dilution kind of one of those strategies where, we just create more common stock shares, sell those to raise funds. There are also, I'd say, more complicated vehicles, like whether it's convertible bonds or these preferred shares. I still, though, feel like when you dive into the details, that these still end up being some type of flavor of, we're issuing a liability, we're adding some assets to the balance sheet, but you're not adding any sustainable increase to the equity of the company. There's not really any reason I could see that the common stock should continue to always trade at that premium. So I'd say that that's really my fundamental argument is, from a first principles perspective, if we don't have anything that is cash flow positive in the business, then our instincts should tell us, all right, there's got to be hidden leverage in whatever this, intelligent leverage strategy is.
Okay, so first up, let's clarify your objection then. Are you saying you believe all of them are going to go down, or you think like maybe MSTR will be okay, but the others will get wrecked, or like how would you distinguish between any of them, or do you put them all in the same camp here?
No, I think there are different flavors. Although I would say that, personally, I would say MicroStrategy is the most likely treasury company to outlast the others. And I almost view this as, it's likely to carry out as some sort of, basically in a way, a pyramid. And, MicroStrategy, they're the most well-capitalized operation right now. You look at, say you're a buyer of maybe their preferred shares, as an example. You are heavily over collateralized by the Bitcoin on the balance sheet. But if you're a common stock shareholder, you're basically going to be the first one to possibly get knocked off.
Okay, but can you paint the scenario? Like, are we talking Bitcoin bear market, or are we talking like equity bear market? Like, who exactly gets wrecked here? Like, what's the scenario?
So the way that I would imagine that things play out is that this correlation between the securities and the underlying asset Bitcoin, eventually that this would decouple in some sort of way. Now, if Bitcoin drops significantly, I think the bear market is the most common kind of scenario that people are thinking, where this company might get into trouble, because we're assuming that the company's common stock should always be tracking Bitcoin. But I have a feeling that a lot of this is fueled by, speculative retail mania. I'm not convinced that there are many institutions that are interested in buying these common shares. Now, I do think these institutions are interested in possibly buying the preferred shares or the convertibles, because if things unwind, they will be the first ones to be paid back. If there is basically enterprise
they're
value
senior in the
remaining.
capital stack and so on. Okay.
Exactly. So, I think what we could see, and what we're seeing a little bit right now, or we saw a little bit earlier in the month, is Bitcoin moves up, but these treasury companies don't follow it. And so I think you could see an mNAV compression either in a bear market because these common stocks tend to trade almost like leveraged Bitcoin. So say Bitcoin goes down 30%, maybe one of these treasury companies goes down more, you get an mNAV compression. What I think people aren't necessarily foreseeing is if Bitcoin, let's say we start to go towards that, $1 million mark, which I think we all believe eventually we're going to get there. Depending on how much hype and excitement there is, I really think this is kind of a hype-fueled game. If you're not seeing your mNAV premium expand, and the whole reason you bought this Bitcoin Treasury Company was because, hey, I'm going to outperform Bitcoin, there could be almost this reflexive behavior of getting out of your treasury company and going into the underlying. So I think you could see either in a bear market or a bull market, these mNAVs tend to compress, and that these all fundamentally rely on somebody willing to pay higher, basically an mNAV higher than 1. And the only reason you would do that is you're assuming someone else is going to come along and ideally pay an mNAV higher than you are. Or even if we say we look at like convertible notes as an example, this is just, I'd say, another tricky way of being able to issue stock at an mNAV higher than 1. I think the headline grabber, and I'll say myself too, when I saw that MicroStrategy had raised their first convertible note and that they were able to do it at 0% interest, the first thing that might come to mind is, oh, we're doing a speculative attack. We're borrowing money risk free. We're putting into Bitcoin, and as long as Bitcoin increases more than 0% a year, I'm golden. But the reality is, when those convertible notes happen, they're able to convert at a price that is, usually say 30 to 50% above the current price. And so you're almost basically locking in, selling your stock at an mNAV that is higher than 1. So once again, whether it was doing an ATM, like an at-the-money issuance of our common stock, or we're trying to sell a convertible note, we're essentially trying to find somebody that is willing to, to take on exposure for our stock at a price or at an mNAV that is above 1.0.
The lead sponsor of this show is Bold, the banking platform designed for Bitcoiners. With the Bold Virtual Visa Debit Card, you earn Bitcoin back on every purchase. The more Bitcoin you buy with Bold, the more sats back you get on the card. Buy $2,500 of Bitcoin and earn 3% sats back. Keep stacking with Bold to earn up to 10% sats back. Bold offers the industry's lowest fees on Bitcoin buys and sells with zero added spreads. When starting out, you can use Bold Wallet, which is managed by the team, but Bold is also supporting self-custody with Bold Vault, a 2 of 3 collaborative custody multisig for zero monthly fees. With Bold, you get your own FDIC-insured checking account to store and send fiat, pay bills, direct deposit your paycheck, and replace your legacy fiat bank. Sign up today and get zero fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Go to getbold.io. This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. Okay, so let me explain a few things, at least how I understand it, and I'll get your response. So a few things. I think the convertibles, my sense of it, just from trying to understand what's going on, my sense of it is actually some of the treasury company guys are sort of going away from that or at least they see that as like, at least for MSTR, they would rather let the convertibles roll off and just kind of go more with this preferred strategy, because the convertible note buyers in this case are like these trading guys who are basically kind of stripping the volatility. They're not aligned with you on the mission. They are actually also shorting your stock, or they may be shorting your stock too. So whereas the preferred buyers, they're kind of on the boat with you, or on the rocket ship with you up, and they are, let's say, aligned a bit more. So that's one thing. Another thing I would say is, okay, so I've got probably 3 points. So that was the first point around the convertible notes. I think they're going to probably, it might be seen more like it's a life cycle thing. So maybe that's like something that earlier companies do to get some debt on their balance sheet, and then eventually they sort of graduate up to the preferred scenario. That's at least how I'm understanding it. It depends how you view it, but I think some of these companies are intending to build a balance sheet now and then do financial services later, right? They may be buying a bank, they may be doing insurance, or it might be more like the preferred shares kind of route. And then I would say the third thing is this concept of, are there tax and regulatory reasons for mNAV to be greater than 1? And I believe, yes, there are. That, for example, in Japan, there's this differential tax treatment, or in the UK, they have, I believe it's kind of like the equivalent of the US 401k. I think it's called SIPs. And basically, these are people in their retirement accounts. They cannot just buy Bitcoin. And so a bunch of them just buy MSTR and these, Smarter Webco and whatever. And in the Japanese case, I believe there's a differential tax rate on when you buy Bitcoin in your personal account versus corporate capital gains tax rates. So there's like this differential. And so my argument would be, it's more like we would expect mNAV to be, maybe it can be very high during these hype phases, but eventually it's going to sort of compress down over time, and maybe the longer run mNAVs will be more like this 1.2, 1.5. Now, none of us knows, right? We're kind of speculating, right? But just as an example, let's say the tax differential is 20 or 30%. Wouldn't that justify an mNAV of 1.2 or 1.3? Right? Just as a quick example.
I think that's, these are compelling, I'd say, like narratives for, why these products should exist. And, they are valid use cases. I mean, there are, whether it's retail or even certain type of institutional investors that do have these restrictions. But I'd say I'm not convinced that strictly because of these tax advantages, that is why they're buying into these vehicles. And, even if, let's say, that is the underlying argument, I know a lot of these, they can't buy an instrument like an ETF, but essentially you would want something that's going to behave as close as possible. And so, I see maybe there would be room for something like a MicroStrategy to exist. But I'm not convinced that, you're going to need hundreds of these different ones to exist. And that, eventually there are, I'd say, there are ways a lot of the time to get around these investment restrictions. It's a bit of a pain in the butt, but, like for me personally, for example, like you can open up a self-custodied retirement account. You got to jump through a few hoops, but I'm not convinced that intelligent, and maybe intelligent is a little bit insulting, don't want to go that far, but that, risk-averse investors would want to, pay that 20% premium, assuming that it would continue to persist. And so I'd say that's probably my response to your third point there. And your first 2 points, I'd say, talking about maybe the shift away from convertibles into preferreds, or, essentially the plan to financialize the balance sheet. My bigger issue with these is that they are still different flavors of financial alchemy. I mean, even if we look at MSTR's, preferreds, I think they represent a very small fraction so far of the total debt that they've taken on. And I think they've issued, I think, like in the billions of dollars for these preferreds that they're allowed to issue. But in terms of what has actually been issued today, I believe it's only a couple $100 million. So I think the verdict is still open if, first of all, there is a substantial market appetite to actually absorb billions of dollars of issuance of these preferreds. And I'd say another one of my problems, like each one of these different vehicles comes with its own drawbacks, if you will. So let's say, just starting with the preferreds, I think the obvious one is if you're promising to pay out 10%, your Bitcoin better always be growing
faster than that. Yeah,
exactly. And now we're all Bitcoin bulls, but eventually you've got to think that, that growth rate would slow down. Or even if basically, if you average out over 100 years, maybe you're still able to get that 10% average. If the entity at any point becomes, unable to pay their dividends, that could still start a kind of reflexive downward spiral. So I'd say, with the preferreds, the problem is if you issue too many preferreds and Bitcoin isn't growing at that guaranteed 10%, dividend that you're promising your investors, you're not going to be able to continue issuing these preferreds. And
so just on the 10%, I think we should address this because I'd have to look it up. But with MicroStrategy, now I'm not an expert on these, just to be clear. So people correct me if I'm getting the exact numbers wrong. But MSTR has Strife, Strike, Stride, and Stretch, which is that new one that's kind of like almost like a quasi stablecoin. But I think the others pay, I think it was $8 or $10 on, when they started. But that number actually moves up and down over time as people, just like bond math, as people buy the underlying, it actually changes the actual percent. So I'm not sure if it stays at an 8 or 10%. I think it was set at $8 or $10. And then that number also moves around based on who's buying and selling the security and how much they issue of those preferreds. And I think that's probably the other key point that I see, which is it comes down to, are you bullish on Bitcoin, right? Like this is where Saylor in his, I think the recent quarterly earnings call spoke about, like, are you a maxi or a double maxi or a triple maxi? And based on, those projections of where you think Bitcoin is going in projection wise, if you think it's going to average whatever, 29% per year or 20% a year or 40% a year or something like this, averaged out over, let's say 20, 21 years or whatever the projection, then yeah, it really can make that sense. Like I guess that's what's in question here, isn't it? Like if you are like you and I and probably most listeners of this podcast, we're all bullish on Bitcoin. We think it's going to be like, now I'm looking at, let's say, the power law as an example, a power trend. And on that, we're currently growing about 40% a year, and it's going to taper down to maybe 25% a year in like 10 to 15 years, something like that. So we're still well above what they're paying, what they would need to be paying out. Now, of course, there'll be some years where it's more and some years that it's less. Like it's not going to be a smooth ride. We're going to have bull and bear seasons on the way. But the way I see it is it's fundamentally workable. Like if you, like the proviso is if you are sufficiently bullish on Bitcoin that you believe the return is greater than, call it 25% a year or 20% per year for the next 20 years, doesn't that mean this is actually quite a good deal for them in that sense? And that there would be a lot of, let's say retirees or like old boomers who want $8 or $10 a year per share because they want some income and they're not willing to stomach the volatility of just hodling Bitcoin. What would you say to that?
No, definitely. You make some interesting points, but I think that on a risk-adjusted basis, buying a treasury company versus buying Bitcoin, buying straight up Bitcoin is always going to be a better move if you want that exposure to Bitcoin. I also want to go on that flip side of, say you want to buy the preferreds. You want that kind of more stable, $8 to $10 coming in. And, going back to your point as well on, once MicroStrategy issues these, whether it's Strife, Stride, STRK, yeah, once they've issued them, they will kind of trade on the open market. If the market thinks that, oh, I don't think MicroStrategy is going to pay their $8 today, you might be able to actually get a higher APY because the bond itself on the open market is going to be trading at a lower price. But I think if it is, for example, if you wanted to buy the preferreds, this is another interesting thing as well. If you're interested in Bitcoin exposure, buy Bitcoin. If you're, let's say you're putting the Bitcoin bull thesis to the side, you just want to get some kind of stable appreciation. I don't think it would be a great idea to buy one of these common stocks. Of course,
you mean the preferred shares, yeah.
So no, actually, in specific, I don't think if you're trying to minimize risk, you wouldn't be looking at the common shares, but you may be looking.
I see it like the common shares would be for the people who want more risk, and the preferred shares are. So it's kind of like the way I'm seeing it, and I'm kind of influenced a bit by my friend Pierre Richard. He kind of explains it this way as well. He says, if you just want 1x spot, okay, get it on your cold card and hold that. But if you want more risk and more return, then MSTR or these treasury companies. And if you want less, then that's where these preferreds can come in, right?
And to go back to the example of the preferreds, one thing I do foresee likely happening is some of these more risk-averse, sophisticated institutional investors. I mean, I could see a great reason for them to buy something like Strife and be at the very top of the capital stack. Also, forgive me if I'm mixing up Strife and STRD, but basically, if you want to be at the very top of the capital stack, and maybe you want to go ahead and short the common stock, I could see a lot of investors doing this because the common stock at a certain point, basically, the common stock in a bear market would be dropping faster than the preferred itself. So I do almost see it as a type of, a pyramid, if you will. And if you're going to play with these companies, you want to be at the very top. And so far to date, from my understanding, MicroStrategy is really the only one that has been able to issue these preferred shares. Everyone else, more or less, that I've seen is, chasing basically the at-the-money accretive dilution. And so I don't want to beat up on MicroStrategy too much because, I do think there is that first mover's advantage. They're, the way that they are taking on this debt, I think there is a chance that they might be able to survive basically Bitcoin's volatility. And that's the key here is kind of like you're saying, yes, we're both long-term Bitcoin bulls, but how these Bitcoin treasury companies are structured, that's going to determine if you can kind of last things out. MicroStrategy, by issuing these preferreds, by having the flexibility of if they want to pay these dividends or not. Some of these preferred shares, it's optional if the dividends need to be paid, and that kind of means that in a time of crisis, if you will, MicroStrategy is going to have more levers to pull. And a lot of that is just by matter of the fact of how large the market for MicroStrategy itself is, the high volatility, the high volume. But, these new treasury companies that are being spun up, they don't have this kind of luxury. They may be able to get some convertible debt. We've seen that. And a lot of them are just doing more and more at the money issuances. So my problem is mostly with these kind of copycats that are jumping on top of the trend, and that I'm not convinced basically there is enough that there's enough room to feed everybody, so to speak. And especially if you're not able to get an appetite for things like the preferreds, you're pretty much just stuck with the this at
equity
the money
ATM only. Yeah. Now
exactly.
I think where I agree slightly with you is that I think it is going to be like a winner take most, right? Like I think and it's probably going to be the case that winner takes most in certain markets, right? Like Japan will have a winner, probably Metaplanet. The UK will have a winner, probably Smarter Webco. There'll be other countries, maybe Capital B, or previously the Blockchain Group in France. Maybe there's different ones in each country, and I think for tax and regulatory reasons, it just makes sense that people in each country, because maybe on their stockbroking platforms and whatever, it's just easier to buy the one that's domestic, or maybe there's some tax reason, like if you buy a US thing that you pay, whatever, 30% withholding for dividends, or there could be different tax and regulatory reasons why these things exist in the different countries. So while I agree with you that not every copycat will make it, I think the point is that the people who are trying to do this in the other countries, I believe, yes, you are essentially, if you were to buy these, you are essentially, you're hoping, or you're betting effectively, that they will reach the size and scale, that they can reach the size and scale to issue preferreds. And once you have preferreds, and not just like authorized, but like liquid and out there in the market, then you are in a better position to weather the next bear market. And so I guess that's maybe that's also the question as well. Like, I don't know how long this bull run goes. Like, maybe we just sort of steadily keep growing for a while, and a bunch of these treasury companies, maybe some of them do get big enough to be able to have their own preferreds, and now they can survive the next bear market, or keep buying during the next bear market. I guess there's a lot of these open questions, and we don't know exactly how it all plays out, but that's my view. What do you think?
So I guess, would it be fair then to say as well that let's put the users that are chasing Bitcoin beta to the side. We're saying that the reason that some of these treasury companies may continue to exist is that it's because there's some type of regulatory structure that is holding them back from either buying a spot ETF or buying the actual underlying. Now, if I had to make a bet, that say we do believe that the Bitcoin $1 million per coin future is going to happen, I don't know if I would make the bet that happens before the regulatory frameworks change and make it easier to be able to invest in these vehicles. I mean, for the longest time, people didn't think we would ever have an ETF. So if we are really seeing Bitcoin take off, this like $1 million future is, in the near future, I have a hard time believing that you would still see these kind of barriers to entry for being able to participate in a more tax advantaged vehicle that can actually behave more like an ETF.
So when you said a 1 million, what's your kind of time frame you're thinking there? Like, because the way I'm thinking about it is, like, if I just look at the power law and just kind of look at the bands and the kind of, on the trajectory, like on the trend, I think power law or power trend, on the trend, it'll be about 1 million in 2033. So we're talking like 8 years from now. Now, maybe it's possible, obviously we have these bull runs, so it's possible that let's say we touch 1 million before then and, come down. And that could happen in 2030, 2031, who knows, right? And then it gets to on that trend about 10 million in 2045. So that's kind of, I'm seeing this as this is like a 20-year play, So I'm seeing it like there's this fiat regulatory arbitrage that exists from between now and hyper-Bitcoinization. And that could be 20 years out, could be 30 years out. So I'm seeing it like this is we're going to, strap in and we're going to ride a few of these on the way there. Whereas I take it, maybe your view is more like $1 million could happen kind of soon.
Even, whether it's, honestly, I would say in terms of how long it takes, I could see it happening sooner than 8 years, but that what I guess I'm trying to really point out here is that I think that, the regulatory frameworks, actually enabling people to have access to Bitcoin or Bitcoin investment vehicles is going to be closely tied to the price of Bitcoin. so that, if Bitcoin is continuing to rise in price, it means that, it's kind of indicative of adoption in some sort of sense, and that it becomes most likely an easier regulatory regime. I don't think it's any coincidence that, we look at the last election, we look at the price right now, and we look at how favorable the current administration has been towards Bitcoin. I don't think that these things are by coincidence. People's opinions and positions, they do tend to follow where the money is going. And you think about the issuers of the Bitcoin ETFs, your BlackRocks, et cetera. They are leaving money on the table by allowing these small treasury companies to issue what I would also describe as fairly inefficient vehicles if the end goal is to just get that, that baseline exposure to Bitcoin. It kind of really depends on there being this, some type of arbitrage available. As soon as there's not a justification for the mNAV premium, it kind of it stops the flywheel, if you will.
Okay, possible, but I see it like change takes time, and the kind of tax rate change that we're talking, like for that kind of thing to happen, I think it just does take, that 8 to 20 years time, right? Like I think it's just, maybe that's also part of our disagreement, whereas you think that, the world is going to adopt Bitcoin sooner, and therefore the tax and the regime and and not just the tax part, but also like fund mandates, right? Like that there may be funds who are only allowed to buy bonds or only allowed to buy certain kinds of equities, or don't forget index inclusion, right? So MSTR and the others, as they grow and they become, and what are we seeing? We're seeing a lot of these treasury companies become the winner in their local market, right? Like AltBG or the blockchain group was like the top performing stock in Europe. Metaplanet was the top performing stock last year just in the world. I think Smarter Web Co is like the top so far in this year. So, like, I think it's difficult for us to sort of step back and be like, well, there's nothing going on there if they actually are outperforming Bitcoin. So I think, yes, to your point about like, okay, if it's like a regulatory reason that's kind of giving them an advantage over the ETFs, but don't forget the common equity of these treasury companies, the public ones, I view them as designed to outperform Bitcoin, right? They're designed to do more. Now, to be clear, they're more risky, they're more volatile, but they are designed to go faster than Bitcoin. And so while we'll see on the short term, and that's why some people are kind of complaining that, oh, why is Bitcoin price ran up to 118K recently, but MSTR hasn't like pumped up to its new all-time highs yet? Why? I think it's more just like, it takes time. It might be like another year or two before MSTR, I don't know, maybe not a year, but it takes, you have to, if you're an investor in these things, it's going to be volatile, and you can't expect it to kind of instantly outperform Bitcoin. It's more like a 1 year, 2 year, 3 year basis that it outperforms Bitcoin, at least in the fiat financial terms sense. Of course, you and I would always talk about, not your keys, not your coins, self-custody, etc. But, as long as you understand the difference between BTC on-chain and equity and debt, and you're holding equity that you are expecting fiat outperformance, that's what counts here, right?
So I guess, we're centering on a couple fundamental assumptions that, there would be this kind of reason for people that aren't able to basically get that direct exposure to Bitcoin, and I think that's we're making say predictions, if you will, on how long that kind of regulatory arbitrage can last. I'd also say though, and I'd say fundamentally, I think we also agree that we are making a somewhat time-based bet. Like you said, if we have to get a turnaround on our investment in a short time period, these vehicles probably aren't going to be the best for us. They work out probably best if you're going to be a patient investor. But I think maybe one thing that would be interesting to discuss is talking about the incentive for people to get involved in these vehicles, and how I really think that the common stock shareholder is really getting the worst risk adjusted deal in the end. And how I think it makes perfect sense. Let's say I'm a long time holder. I've got, 100 or 1,000 Bitcoin built up that I've been saving. It would make perfect sense for me to find a shell corporation, maybe some kind of random dead company. And this is essentially what's been going on for the past few weeks when we see these copycats is, we find some publicly traded company that, probably isn't actually making significant cash flows. And, well, why don't I go ahead and seed this, turn it into a Bitcoin Treasury Company, and all of a sudden, if, say I seed this new Bitcoin Treasury Company with 1,000 Bitcoin, and the stock is able to trade at a 2x mNAV right from the get go. I've all of a sudden just figured out a pretty clever way for me to sell my Bitcoin at double the price and basically sell my Bitcoin at double the price, or if I don't sell all of my shares that are allocated, because a lot of these they do have lockup periods, but I even if I don't sell that immediately, I'm going to be at the top of the capital structure. If things collapse, if things don't go well, the way that your shares may have been issued, you might be able to ensure that you're not really putting your 1,000 Bitcoin at risk. So part of it is, I don't think people are acting in bad faith, or even yourself, acting as an investor for these. I don't think any of us are acting in bad faith. I think it's really just about, do we really understand all of the risks and the risks that we want to take on? And I think if you're able to get in at the ground floor of these, that's an incredible opportunity. There's almost zero risk for you to be one of the first investors in one of these companies. Or let's say you're acting as an advisor. If we looked at Metaplanet's balance sheet, I think Metaplanet is full of convicted individuals. Dylan LeClaire, can tell he's a great dude. He believes in the mission just like we do. But if you look at their balance sheet right now, the advisors that are being compensated the most is I believe it's Eric Trump, maybe Donald Trump Jr., one of the Trump sons, as well as David Bailey, and they're sitting on I believe it's roughly like $30 million of profits in their locked up shares. Now those do unlock over a period of about 3 years, but I don't know if people are aware that if you're just a buyer of the common stock, before you kind of get paid, this investment vehicle is making sure that their advisors are getting their shares, that their advisors are getting paid, that the executives are getting paid. And my worry is that not everyone is going to be able to essentially get out of these vehicles unscathed. And maybe another question to flip for you, Stephan, is what do you think the end game is for these treasury vehicles? Say we do get to hyper Bitcoinization, the dollar doesn't go anywhere, or the dollar goes to zero. I mean, eventually you have to think that these corporations would, I don't know, maybe they're going to dissolve and give out the Bitcoin. Like, what is the true end game? Or you'd mentioned potentially trying to financialize the balance sheet, but it doesn't sound like, what are they going to be doing that is something that someone else can't do? It's another fundamental issue that I'm seeing is, what is the innovation? Anybody?
Okay, so let me respond to a few points there. I would say to the point about, people getting in on the ground floor, don't forget, there's risk with these things. And it's easier said than done, right? Like, I think, there are people doing copycats and whatever, but like I said, I think it's going to be winner take most in, big markets around the world. So there'll be maybe one, maybe two kind of players. And so certainly people can be putting up coins into ventures that don't make it, that don't win in that market. So I think there is risk, especially early stage, because you need partners and you need people to sort of help you put it together, right? It's not a one man band kind of thing. You need like, people bringing capital markets expertise and Bitcoin people and, various employees and staff and, people expertise, right? Whether it's capital markets aspects or legal or accounting and so on. So I would say there's risk, right? It's compensation for risk, just like, equity in a startup that, as you and I have been in the Bitcoin world, as an early employee or a founder, you might have equity and, you got in on the ground floor. Are you dumping that on retail? Well, it's more like you took risk to build that business, that opportunity. And the opportunity in this case is more like, can these entities tap these huge markets of debt and equity in a way that you and I as individuals cannot do? And I believe that answer is yes. So that's kind of my fundamental answer. Now, to the second point you raised, which is like, what's the end game? For me, I think the future is difficult to predict, right? So none of us knows. But maybe it's kind of like a Berkshire Hathaway situation, right? There'll be all these shareholders, and they treat it like this is like a big holding company that holds other companies, or it could be that some of them are like a bank. They try to become like a Bitcoin bank. You could sort of, if you kind of squint, and you could sort of loosely say that about MSTR even now, that it kind of that they are paying out, they have these these securities, these financial products, right? Strive, stride, strike, stretch, etc. You could say that they're kind of like a quasi bank, but not in the traditional, with a credit card and a debit card and an ATM network. So it could be that they become banks. It could be that they become insurance companies. It could be that they, maybe the play is, look, there's this gold rush from now over the next, let's say, 10 to 20 years. And the gold rush now is to build your balance sheet and grow your balance sheet, grow your company. And then it becomes a game of, well, what businesses are you going to acquire? Because, okay, to your point, long term, let's say hyper Bitcoinization happens in, I don't know, maybe not 20, maybe 25 or 30 years from now. Maybe at that point, who knows? There's different views. Some people have the view that fiat is going away, right? That like, it's going to be Bitcoin and everything's denominated in sats. Other people have the view that no, actually fiat is not going away. That there will be, now I don't agree with that view, but there are people who hold that view. And they believe that it's kind of just like people will just still have fiat, and these Bitcoin Treasury Companies will just keep on going, because it'll always be more. Bitcoin will still be growing, even at that point, faster, than what the fiat, the typical fiat investments would do. Now, my view is more on we're going to the Bitcoin standard, and it's going to be denominated in sats, but it's just a long time, and none of us can predict when. It could be 30 years. It could even be after our lifetimes, for all we know. Right?
It's absolutely, and it's hard, of course. I tend to agree with you, first of all, because it's hard to imagine a future where, say Bitcoin for 30 years straight has been, growing 20% against the dollar, or even more against other fiat currencies. You'd have to think eventually people would be like, okay, like the jig is up. Like I should probably use this Bitcoin thing. But then that takes us to the scenario you're describing of, what if these become kind of banks of some sort, or, really, some type of investment vehicle, perhaps. And I would say that, if they do become, say they operate as if they're some type of, well-capitalized hedge fund, like Berkshire Hathaway. And actually, that's a good one to study. I'm not sure if what Berkshire Hathaway's mNAV is. I think that'd be an interesting thing to take a look at. But I would have to believe that the mNAV wouldn't really be a premium, and that there's not really anything different here than some type of hedge fund. And it takes me back to, I think this might be an interesting segue into the kind of 1920s stock bubble. I think there are, what I want to paint maybe a comparison towards is the structure of the investment vehicles, and that I'm not convinced that the story really makes a huge difference. Whether the story is it's because we're creating this, we're pursuing this type of strategy with Bitcoin as the underlying. You also have the ETH folks. They're doing the same thing, but
Yeah,
part of
and of
their
course, as a maxi, I believe those strategies will fail. But I think
yep, yep.
my answer would just be this time is different, truly because of Bitcoin. But go on.
Yep, yep, and I right there with you. I think these altcoin treasury companies are fundamentally gonna fail even worse, but they do, I'd say, have an interesting dynamic into their story of, hey, we've got yield. The Bitcoin treasury companies, they really do have a little bit of this problem where there's not really any underlying yield being created from the Bitcoin. And if we look at the story being told back in the 1920s, trust boom, um, back in the 20s, basically, there were these investment trusts that would buy other securities, other stocks, and they would basically say, like, hey, we bought a stock that's, making 20%, returns. So usually these stocks were paying some type of dividends. But then the investment vehicle itself would end up trading for a premium. And actually, there's an interesting quote from a guy named John Galbraith. He was a Canadian American economist, like back in the 30s and the 40s and 50s. And I just want to read something quickly that he had said. He said the measure of this respect for financial genius was the relation of the market value of one of the outstanding securities of the investment trust to the value of the securities that they owned. Normally, the securities of the trust were worth considerably more than the property it owned, sometimes even twice as much. We're seeing mNAV basically again in the past. There would be no ambiguity on the point. The only property of the investment trust was the common and preferred stocks, debentures, mortgages, bonds, and cash that it held. Yet, had these securities all been sold on the open market, the proceeds would have invariably been less, often much less, than the current value of the outstanding securities on the balance sheet. And actually, James Chanos, he just shared like an interesting stat. I think it was a few weeks ago that if you look at the amount of capital being built up by Bitcoin treasury companies lately, that I think it's matching 10% of the savings rate of the entire U.S. economy. So like there is a substantial amount of capital being sucked up into these investment vehicles. And a very similar thing was happening back during this investment trust craze, if you will. Back in 1928, there were, I think, the average was, excuse me. There was an average of one treasury company being issued each day. And the only difference, though, is what they were buying other stocks. And by the end of 1929, it represented a third of all the capital issued in the U.S. stock market, period. And the reason I think these parallels are really important is, if we look at the similarities between what happened in the 1920s stock crash and kind of the direction we're going right now, I don't think there's systemic risk posed by these treasury companies today. But if they continue to get more and more popular and we do start to see, like we said, there's probably not going to be room for a ton of these to exist. Maybe you get room for, a few to exist in their local markets. You get a winner. But what happens if this thing kind of starts to get out of hand? I think you could see a massive crash. And ultimately, what happened in the 1920s was these investment trusts, they actually started dumping their underlying shares to try and rescue the common stock. It's kind of like this reflexive collapse where, say your mNAV is at a discount, you sell off some of whatever the treasury is to buy back the stock. But then you harm investor confidence because the underlying, you're adding selling pressure to the underlying. creates this kind of reflexive loop. And, this was a huge driver of the stock market crash back in the 30s. And the Investment Act of 1940 was created strictly to stop this kind of behavior. And my feel here is that you don't know the incentives or the moral framework of all of the promoters, but certainly back in the 1920 stock crash, especially towards the end, you're getting all kind of different promoters. And I'm worried that we may end up seeing something similar where you have anyone willing to promote, a treasury company, and that the only reason that a lot of them are existing is, you're not allowed to do these with securities underlying, but you could do it with commodities. I think I even saw there was like a gold treasury company. I think there maybe like stable coins of gold or something like that. But there's, I think they're basically trying to take advantage of basically the last remaining way of doing the same scheme that existed over 100 years ago. And, honestly, I wouldn't be too surprised if you do have a couple of these blow up. Could there be a regulatory risk where even just the entire structure, of trust companies gets shut down, where you can't run a trust company with securities? You also can't do the same thing with commodities.
So I think, to me, coming back to what I was saying earlier, I think this time the Bitcoin aspect of it is different. What I would say is, as an example, even in that 1920s example with treasury companies blowing up and whatever, in this go around, I think what we may see is M&A. We may see maybe a bear market happens, and maybe some of these treasury companies get there's some who go Pac-Man on the others, right? Like they just kind of are big, and maybe they are able to do mergers and acquisitions activity. And remember, the underlying Bitcoin is a global liquid 24/7 market. That's very different to kind of the treasury companies aspect, or what you're talking about in the 1920s with like different companies, different assets, and
Yep.
I would say that actually genuinely is the thing that's different this time. And what we're effectively doing, right, as my friend Stephan would say, it's like it's kind of ironic that people lament that, this guy, maybe someone worked really hard to make sandwiches or make a restaurant or do a cafe when they could have just bought and held Bitcoin. And Stephan's answer to that was kind of like, well, maybe actually stopping central banking is the most profitable venture of our time. And that actually, if you adopted Bitcoin, and if more people did adopt Bitcoin, then eventually we do get to that kind of hyper-Bitcoinization state. And then at that point, I think it might have converged more, and then at that point it is more about kind of traditional business. The other point I think would be good for you to answer as well is, remember, we are already living in a world with crazy PE valuations on fiat companies anyway, right? Like look at Nvidia and Tesla and so on. People are buying these companies at some huge they're buying it at a very small fraction of what the annual earnings is.
Do valuations and cash flows even matter, right?
Yeah, so I think that's kind of where we're at, but I acknowledge that there is risk, and I think people should acknowledge that, if you are an equity holder of these, you could get double wrecked, right? Especially in a Bitcoin bear market, and if your Bitcoin Treasury Company is not successful at growing to a certain size and scale, or has some other kind of blow up or failure or government seizure or government regulatory risk, certainly. So the way I see it is, you should first and foremost self-custody Bitcoin, and then only with a smaller portion, that's where you should, if you want to do this treasury company thing, that's where you should think about it. But it should not be the lion's share of how you do things. But I believe fundamentally that in 10, 15 years time, some of these will still exist, and there will be a bunch of them that survived through this, through these bull and bear market cycles on the way, that, in a, let's say, sustainable in the sense of from here until hyper-Bitcoinization, like because of the tax, the regulatory, the some of these different arbitrages that they're able to tap into. So that's kind of, I guess that can be maybe my closing statement. And you want to take your, have a closing statement, and give us your final argument on this, and we'll call it an episode.
I think that sounds great. And yeah, don't want to come across as strictly a hater here. And I think we do land on an extremely reasonable middle ground. Not your keys, not your coins. The vast majority of your exposure to Bitcoin, you should own spot. But, if you do decide to partake in these, these Bitcoin treasury vehicles, you should look at it as increasing your risk, potentially increasing your returns. But what really breaks my heart is when, you see some people getting more excited about the treasury companies than the underlying. They dump all the underlying, they buy the treasury company. As long as you're not doing that, no complaints whatsoever. And I think it's really just comes down to, I don't think that it's a sure bet. Basically, I think we both agree on that. These treasury companies aren't a sure bet. I think the disagreement comes on, could some of these hang around? Like I had said at the beginning, my first instinct is, these aren't necessarily doing anything past, taking advantage essentially of like financial services, financial innovation. I am a Muslim, so I have a Muslim background, and just part of the values as well is, if something is somehow sustained on loans or kind of gets close to usury, basically just feels like to me on a first principles perspective, it does feel, there are differences this time versus the 40s and 30s, but that I still have a feeling that this won't end well. But as long as you have the vast of your exposure in Bitcoin, the underlying king asset, then you should just be just fine.
Right. Yeah. And I've mentioned elsewhere that I do understand. I would say the two principal objections I can think of are, one, the cypherpunk objection of like, hey, not your keys, not your coins. It should be a peer-to-peer asset that you use in the self-sovereign way. And two, the religious objection, right, which various religions have prohibitions against, usury and, the riba concept. And so I certainly, I see those as the two main objections. But I just see it like not everybody, I see it as, well, not everybody will hold those, or it's kind of not a 0 or 1. It's not a binary kind of thing. So anyway, yeah, thanks for joining me. And where can people find you? And anything else you want to mention?
I appreciate that. Yep. If you guys want to find me, follow me on Twitter. Jad Mubaslat handles ChampBronc2. And yeah, also follow Sonoda. If you guys are doing commercial, industrial, energy contracts, you're involved in that, hit us up. We can get that money flowing a little bit faster for you.
Fantastic. Well, thank you for joining me.
Awesome. Thank you, Stephan. Take care.